Well, welcome back. Talk about a new world order. India has surpassed China to become the world's fastest growing economy. Was it a sign of things to come, a one-off incident? And do we even care? Let's find out more from Paul Gruenwald of S&P. So, Paul, I mean, is this really a historic moment that we're talking about here?
It was a surprise, right? We knew that the Indian authorities were redoing their numbers on a kind of international basis, but the magnitude of the change was quite large. Last fiscal year, we went from 5 to 6.9. This fiscal year from 5.5 to 7.4. So those are big adjustments. I think the RBI is still digesting it. We'll have to see, but for now, India looks like it's caught China in the growth race, right?
Even Raghuram Ranjan's comments were interesting that he was sort of scratching his head saying, I don't really get this.
Well, he's got to figure out, how much slack there is in the economy, and he looks at how fast it's growing, and it looks like it's growing a lot faster than before, and he just cut rates, so I think he's trying to digest some of the numbers. So we may have to wait a few months for some clarity, but impressive jump in the numbers for India, right?
But that said, China is still 4 times the size of India's economy. Right. So, I mean, it's not really going to be in a matter of maybe a year or two that India is going to outpace China's economic size. That said, what does this really tell us about the changing dynamics here in Asia?
I don't think it says too much. I think you're right. China's still way ahead of India and kind of moving up the value chain. The question is whether what we've seen in China, particularly the coastal provinces, moves to Southeast Asia and then goes into India, and we see a sort of sustained takeoff in growth. But India is probably, 1/4 of China in terms of per capita income. So there's quite a ways to go to catch up.
Yeah, and what do you make of this deflationary spiral that seems to be gripping China? Almost China seems to be similar to what's happening in Europe. And the growth levels are not really picking up. And yet, even when they do stimulus, the financial markets don't even seem to react as much as they used to.
Yeah, I'm not sure it's quite deflationary, but we got the oil price shock, right, which surprised everybody. So we had a 50-60% drop in crude. That takes down the consumer price index. The question is, does that then become a kind of widespread deflationary spiral? Do people say, oh, the price of oil fell, therefore I'm not going to buy my flat screen TV, so the price of that's going to fall as well? Or is it just a windfall that people are going to spend? This all happened kind of November, December, right? We had the accelerated drop in oil. So we're scratching our heads a bit. We haven't seen the pickup in consumption, but at least in the short run, that kind of, that deflationary impulse has got to work its way through the economy. I don't think we're in sustained deflation land in Asia, but we're going to see, a couple of quarters with kind of below normal inflation rates, and the authorities got to kind of figure out how much of that's permanent and how much is temporary and kind of act accordingly.
And this mystery that you earlier alluded to, wondering why the tailwind isn't really helping Asia. We've got the U.S. economic engine actually humming along for a change. We also have lower oil prices. A lot of Asian economies are net importers. So how come this is not giving us
that's why it's a mystery. We're trying to figure it out, but you're right. We've got the U.S. consumer spending money. Even with the weakish fourth quarter numbers in the U.S., consumption growth picks up, right? The contribution of consumption to U.S. growth picked up. We're not really seeing that in terms of Asian exports. We see a little jump here in Taiwan, and the next month's okay. Same thing in Japan, same thing in China. So we're waiting for kind of a sustained rise in Asian exports to kind of get that part of the growth engine going again. It's been absent for 5 years. And then on top of that, we had the cut in oil prices, and that doesn't seem to translate to consumer spending as well. And we've had a bunch of central banks all of a sudden cutting rates. So the pieces don't really fit together. And on top of all that, we're going into the Chinese New Year where the data always get mucked up. So we may have to wait till kind of March or April to see what's going on. But I think in the next couple of months, it's going to be a soft patch, and we're going to really have to see whether these tailwinds show up. If they don't, I think we're going to have to redo our forecast and kind of put in a lower growth path for Asia, because we were assuming those were going to work their way through the data.
Is it too much of an exaggeration to say maybe we might return to the era of 94 or 2004 when Asia underperformed as U.S. rates started going back up again?
Yeah. Well, if the U.S. recovers, that's a good thing for Asia. What you alluded to, I think, is correct. The financial markets have to digest this. They're digesting the downward shock in oil prices. They're going to have to digest higher rates from the U.S. But if you ask, policymakers in Asia, what's the best thing that could possibly happen? It's got to be a U.S. recovery, right? If the U.S. is putting up, in our view, 3.25% growth this year, 3% next year, that translates into higher GDP growth globally, more global trade, all that kind of stuff. That's good for Asia.
Yeah, that's good for Asia, but maybe the world has changed. Back then, in 94 and 2004, you didn't have this huge China. But then again, in the past decade or so, you had a lot of Asian economies piggybacking on Chinese growth. But if China sputters along, does that create a bit of a twist?
Yeah, well, first of all, China is bigger than it was 10, 12 years ago, so I guess the relative impact of the U.S. is going to be less. The real question is, how much of that demand was really Chinese demand versus a U.S. demand? So all these studies that kind of stripped out where's the ultimate demand really coming from, most of them concluded it was from the U.S. and Europe and not so much in China. But if that's changed and China's a bigger driver and China's slowing down a bit, we're not pushing the panic button at China. But, that's going to be a partial offset, I agree.
Yeah, okay.
And those two economies are roughly the same size now, right? Depending on how you measure it, U.S. and China are roughly the same.
Yeah, so I mean, what a difference a decade makes. So I guess
especially when you grow by 7% over a decade, you double, right?
Right. So I guess with a lot of data on hold due to the Lunar New Year effects, we've got to talk again in a couple of months' time to reevaluate what your forecasting is. Thank you so much, and Happy New Year to you.
Likewise.